What's going on, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. Today's episode is going to be quick and to the point. If you're new here, welcome to the channel. I use technical analysis and intermarket analysis to get a good idea as to where the stock market might be headed next. You might be wondering, what is intermarket analysis? That's where we look at four main asset classes. We look at stocks, or the indices, we look at the dollar, we look at bonds, we look at commodities as well, and we also layer in some stock market indicators to really help us determine the underlying strength or weakness. Let's get into today's episode. All right, welcome back. We're going to start off looking at the market dashboard. The first thing that I want to just call out here is the leading sector for today is utilities, and utilities is typically a risk-off move. Now, what you'll be seeing through the theme of today's episode is it might not be the best time to be putting on a long position, and I'll explain my thought process behind that. Now, I still think that April has upside. I don't think we just topped off and this is the end of it. I think we do have more room to go, and I'll explain as to why I believe that at this particular point in time. But it does seem like we might have a little bit of a breath here moving forward, and we'll get into that. But utilities leading the way. When I look at this rate of change here from the utilities over SPY ratio, we are still above zero. This is part of Michael Guyad's beta rotation strategy. So this right here being above zero lets us know that we're in conditions where we could see more volatility increase. So it's kind of like pump the brakes, be careful here in this environment. Doesn't mean anything's going to happen, but it is letting us know that, we might see volatility increase, or the possibility is more likely than it would be below zero. Now, if I look at the BP-SPX chart, I like to look at this as an internal indicator, and we called out this potential breakout. We saw it scream up higher, but look at where we're at right now, 81.8. That's a pretty overextended reading. If you just look back to the left of the chart, we haven't actually been there since June, and if you remember June, we've had some pretty big rollovers in June, but then they were obviously recovered. Then you take a look at the RSI, we moved into that overbought territory. Keep in mind, overbought can stay overbought for a long time. However, this is just telling us okay, might not be the best time to go long at this particular point in time. Doesn't mean that the market can't go higher, but what it does tell us is there's more risk in going long right here, and by long I mean buying an equity or buying the S&P 500 than there is to just wait for a potential pullback. So more risk going long versus the reward, so to speak. Now, if I go to the VIX, I wanted to call out here, the VIX has been really kind of going sideways here, slightly up on the day, but ever since we filled this gap that's been open for over a year, we've been kind of just going sideways. So right now we put in a little bit of a hammer candle and we have an open gap right above us. So that sets up the possibility that this is holding as support and it could push us up back into the channel and potentially fill this gap. We might stay within this falling wedge or bear channel right here, but just know that that is some exposure. And when we see this move up to the upside and potentially fill the gap, you can see the S&P 500 pull back. Not to mention, let's layer that on with the negative divergence still building in on the NYMO, the Nyesi-McClellan oscillator. Did see a pretty positive day-to-day 33.66 on the reading, but we still are holding the negative divergence. Let's layer that on with one other thing. Actually, probably multiple things. The NIAD is an internal indicator that I like to use to see if there's a lot of strength coming in and if it's backed by strength. But you can see here the NIAD from April 5th, we've been heading and putting in lower highs, where the S&P 500 really was over here on that gap up when we were right here, and it's been putting in higher highs relatively. So there's weakness kind of coming in, and as you can see here, I drew out this kind of horizontal line. You can see it's kind of chugging along, going sideways, bouncing around in that area. So that to me looks like if we break below this 40.65 to 40.70 range, it could set us up for a sharp decline to fill this gap down here, which is right around 40.20 to 40.35. So that is a possibility, and I am keeping a very close eye on that. Another thing that I want to call out here is the dollar saw continued weakness, and if you notice, the S&P 500 didn't really react. And that is a sign to me, because typically when you see the dollar break down, you can see more strength come into equities, gold, silver, and various other asset classes. But what we saw here was we're kind of hitting this tapping out point, potentially a little bit of a breaking point here. Not by breaking, I mean like pump the brakes physically, where it's slowing down. Now, this was a very aggressive move to the upside so far, and then you could see that this very small candle I'll dive into on the daily time frame. The small candle represents, the small range represents potentially slowing of momentum, which it could potentially either one, consolidate, or pull back a little bit. And there's still a lot of opportunity here if that does pull back, which we'll get into. But just take note of the dollar. It is coming into an area of support down here too as well, right at the 20-period moving average and at that level of 92. So if we pull into that, we might see a bounce. And that can also, the dollar moving up could put equities, pressure on equities perhaps. So something to keep an eye on there. Now, if I look at the 30-minute time frame, you can see this big gap up, and we've been just channeling sideways here for quite some time. And, you know, if we start breaking below this 405 range, I think it sets us up to, like I said, fill this gap beneath us. But if we do get some strength in the aftermarkets, perhaps that 407 breaks, and then that can act then as an area of support. Just be very mindful if we have a big gap up, you might get a lot of people selling into that strength, which I talked about in yesterday's video. And we didn't get the gap up fully, but we can see that there was that selling taking place, a lot of chop taking place intraday. Now, if I look at the daily time frame, you can see that candle a little bit better. Just look how small the range is. So we're seeing huge momentum to the upside, and then all of a sudden, this small range candle says, okay, we're you know, foot off the gas a little bit right here. Now, it doesn't mean that we can't continue this thrust upwards, but what it does represent is just the possibility for a period of consolidation and or a pullback. So it would make sense that we'd get profit takers on a strong move to the upside. And when you look at the Qs, very same thing. Look at that candle, small range candle, gravestone doji type candle, which could represent a slowing of momentum. We did break out of this neckline. So if we get a pullback, get ready to buy that dip, because this area of resistance then could act as an area of support, and we can get that continued momentum here in April. Not to mention it's in confluence with the 20 period, the 50 period moving average, this gap and this area of resistance I was broken out of. So if it pulled down to 325, 320, this kind of range right in here, yeah, get ready and pay attention to some tech stocks if that were the case. Now, another thing I want to call out is the internals, the BP NDX chart. It is coming into overbought territory. Now, look at it right here. It's moving up 75. That is somewhat of an overextended reading. It's been higher before, but it's something to take note. And then the RSI reading you can see here is 69.86. Now, it could stay overbought for quite some time. Remember that. However, typically you want to pump the brakes a little bit here because of the fact it is getting to that oversold reading, and it could quickly come back down. So just be mindful of where we stand in the internals. Here's the INDU chart, the industrials. We are right around the Dow Jones Industrials, right around this area of resistance within this pattern. We are in bullish context overall. Okay, 20 is sloping up, 50 is sloping up, 200 sloping up right here too as well, slightly down on the day. Now, what is interesting about this chart, now I don't have the BP chart for INDU up in front of me, but it is not nearly overbought. It's actually more almost oversold than anything. So just interesting price action overall, but keep in mind that we are still in bullish context here, and we could be just taking a little bit of a timeout right here before further continuation. Now, if I look at the IWM, the Russell 2000, not much is going on here. Yesterday I said, it's not looking all that great to me in this particular point, mainly because we have the high here. Now we're potentially putting in a lower high. We had this area of resistance here. We have this area of support, but overall, we're above the 50, we're above the 20 slightly. And are we above the 20? Let's see, actually, close at 22431. Yeah, we are slightly above the 20 period moving average is at 223.93, basically sitting on it. So still bullish context, but just note it's kind of looking like it's slowing down with these smaller range candles. The price percent oscillator is doing a bullish crossover right here, and that's above zero, so that's a good sign. But I do not see a clear trade setup at this particular point in time in the IWM. Crude oil, I'm continuing to watch either a breakdown or break out of crude oil until I start moving into the energy sector. I do think that the energy sector has some opportunities in there because we've been taking a little bit of a break, and we could be putting in a higher low, and then we can buy into that trend and buy into that momentum to see some really big gains in individual stocks. So I'm continuing to keep an eye on that, but nothing's changed as of this particular point in time. But what I am seeing here is some strength in commodities. So I'm seeing strength in silver. I'm seeing strength in gold, so precious metals. However, we haven't really broke out of silver's falling wedge right here, but it is good seeing that the dollar came down and we're starting to see strength in silver. Now, the dollar looks like it's coming into an area of support. So if that is the case and it moves back up the dollar, this might head back down and we can continue to coil tighter here. So keep in mind, we got high here, lower high, lower high, lower high as of right now. If we break out, that could be good strength, but we still need to recapture that 50 period moving average and then take out this previous high. So there's a lot of confluence of resistance right up in here. But if we do get up there, maybe we break out, back test, and then move higher. I've been seeing that on the miners there too. That could be a very, very good sign for silver. Gold, also very interesting. We broke out of this falling wedge here, but I could draw this trend line out a couple of different ways. We're still below the 50, still below 200, but we are seeing some continued strength here, which is a good sign. Then I just really want to quickly look at yields. You can see yields, they moved into a massive area of resistance, both the 30 and the 10-year. When they come into an area of resistance, that could be a good sign for gold. And why do I say that? Well, here in August was the bottom really for the 10-year and 30-year, and then we continue moving higher. And if you look at where we topped out in gold in August, or where we topped out in gold, it was right there in August, and we started moving lower. So if yields are taking a breath here, this could send us higher in both gold and potentially even silver if the dollar comes down too as well. So something to take note of, that this very well could have been that little double bottom, and now we're starting to see some strength come in. It is backed up by more volume than there was yesterday, but it's still nothing crazy to really support this move as of right now. So it's to be determined, but it does look good so far. All right, so that's all I got for you on today's market brief. I want to quickly recap because it was very quick. We're just moving into a small range candles. Okay, the small range candles and these doji candles means indecision and slowing of momentum after followed after a larger move. So take note of that. We're at an area of support here in the VIX, and some of our BP charts are getting to overbought territory. So it might not be the best time to go long in specific stocks or in the S&P 500 or various indices. So if you see these good setups, just be cautious. Bullishly cautious in most cases, because I still do believe that if we get the pullback here, maybe to S&P 500 4,000, this could present itself for an excellent opportunity to go long and then see that continued strength into April. That's all I got for you. See you later.